Hey everyone, it is Evan here from the Trade Risk on Friday, February 15th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So jump into our technicals dashboard, kick things off here. You can see another very strong week for the bulls, continuing this uptrend higher. We finished up over 1% across almost all of the major averages here. The Qs lagged just a little bit today, but the Russell really starting to pull out in front. And just take a look at the 5-day change numbers. Russell north of 4% right now, so some very impressive kind of leadership resuming there. And when we look at how the major indices are doing versus their key moving averages, you can see we're basically back above everything. We are grappling with the 200 SMA across the board, but we're starting to reclaim them. And do remember that this calculation here is on total return numbers, so this could be a little bit different. In other words, the 200 SMA on my data set here is looking at total return data, but generally speaking, we are attempting to reclaim the 200 SMA right across the board. If we go down to sector performance, we saw some nice rotation this week. We saw energy get a nice lift to the top of the stack here, as well as biotech, which had been kind of in the bottom tier for the past couple of weeks, not breaking down, but just not really performing with the market. But now we got some nice rotation in those two areas of the market. We also have transports and semis up there as well, and you have the defensive areas of the market, staples and utilities at the bottom, which is exactly essentially what you would want to see. When we look at some of the major markets, we have oil, we have equity, S&P 500, and we have high yield credit, all leading the charge here. And on the flip side, we have volatility, which continues to unwind. We have the long bond, which continues, or really it's been acting quite well. We'll talk about that, but coming off just a little bit, and emerging markets simmering just a little bit as well. So let's jump into the charts here. S&P 500, that's what we're looking at. This is a weekly time frame. So each bar represents 1 week worth of trading, and this is the cash S&P 500 market. And what we can see here is just a super strong week of performance, 2.38%. Remember last week we had just that small kind of 2.5 day sell-off. That's all we got. We had just enough kind of indecision creep into the market here with this tail, this potential kind of outside reversal week. And look, it just did not confirm. We did not get the follow through that the sellers would have liked to see to start breaking us down and breaking through some short-term support. We saw the exact opposite. We saw the bids just step right back in and push us to new highs, or new highs in this relative trend. So when we look here at the weekly time frame of the S&P 500, we are still marching right back to this key 2800 level. That was the top end of the range in the fourth quarter of the S&P 500. That seems to still be the magnet that this market wants to get back up there and retest, potentially slice right through with the rate we're going now. But we are very much nearing that zone now, just about a 1 or 2% move from about just 1% from tagging that 2800 level. So we'll see if we get there next week. That's where the market failed all in the fourth quarter of 2018 and eventually rolled over. Would expect there to be some decent resistance or prior price memory at that level, but we could have said that about lots of other levels in here along the way that we've continued to slice through. So let's wait and see before we kind of preemptively assume that the market will just roll over from there. Let's measure it once it gets there, and if it gets there. But for now, that's the key level to pay attention to on the upside. On the downside, which seems very far away at this point, 2600, that is the big level on this weekly time frame chart to pay attention to. And you can see, of course, we are much closer to the top end than we are to the lower end of this more intermediate support. So we'll need to look at the daily chart to get a little bit closer on some shorter term levels of support to pay attention to. So that is really the landscape there. MACD trying to get back into positive territory. We have just about or fully on negating the series of lower highs and lower lows in place. I mean, technically we still need to kind of break above this 2800 level, but we've essentially retraced this entire leg at this point, 90% of it anyway, from the December slide that we saw in that last month of 2018. So let's go to the daily chart of the S&P 500. We'll switch things over to the SPY ETF here, and you can see we are coming right into this kind of nice little air pocket here up to this 280. This is where we topped out from in December. It's where we topped out from in November and October as well. So like we said, it's the top end of a range right around 280. We're getting back up there. We had this nice kind of gap and go today on Friday to continue us higher in this trend. Now, of course, as excited and as bullish and as constructive as we, have seemed at this point in this video, we still have covered a tremendous amount of distance. And of course, it is always kind of difficult to chase this market up. So you always have to have a plan, a strategy, a way to get involved in the market. Maybe it was last week on a 2.5-day pullback. Maybe it's buying the new highs and trailing a stop tight. There's lots of different ways you can attack this market in terms of trading strategy. It's certainly beyond the scope of these types of videos. But for now, we are continuing higher. It is not an easy chase, of course, but we have to respect the trend when the trend is in that direction. And so far, we are continuing to kind of move higher in this general slope here. You can certainly draw these in a more professional manner, if you will, but we generally have this kind of channel that is heading higher here, and this 280, which is the relevant level back from December. That's what I'd be paying attention to on the upside. On the flip side, we could use yesterday, this is Thursday's lows, as kind of an upper level line in the sand. This is now at 273. Notice throughout these videos, if you're following every week, we kind of just slowly ratchet up the most relevant support level as the trend continues higher. We essentially want to just continue to look at those prior swing lows in significant areas. We had some decent volume come in Thursday, and it was kind of a sideways indecisive session on Thursday. So, if we were to start to roll over hard next week and take out Thursday's lows, I think that would be significant in the short term. And again, risk can and does happen fast, right? So as good and as rosy as this market looks right now, it can turn on a dime. We do want to be prepared for a potential, swift rejection and high volume breakdown. It can happen. It certainly seems like the path of most resistance at this point, just because we are in this nice trend higher that has continued to remain resilient, but we want to always keep that open mind. So S&P 500, those are kind of the levels I'd be looking at. 280 on the upside, and then we have that 273, and then all the way back down here around 266 or so. That was the 6-7 day consolidation we put in right at the end of January that we broke out from and kind of got a little retest of, if you will, late last Friday. So that would be the next bigger level zone to pay attention to, would be right around 267. If we take a look at the VIX this week, I think we got our first close under 15, which is remarkable to see, how we've just totally slid lower here. Nice little orderly waterfall from north of 30, almost 35 on the VIX back at the end of December, and now we are certainly less than half of that, trading sub 15, below all of kind of the range here, even from October, November, December, getting back to those early October levels, which we originally kind of rallied from around a 12 in the VIX. So volatility continues to compress, ranges continue to more or less compress, but still grind higher, and the fear is certainly getting sucked out of this market. If we go to the Russell here, this is definitely the bright spot. Once again, if we look at the Russell here on a weekly time frame, you'll notice that this is the first now to really start, of the major averages, to really start to break above the fourth quarter range from 2018. So remember, we were looking at the SPY 2800. That's been our magnet area to look at. You can see we're still below it right now, but if we look at the Russell, we can actually see that we are breaking above, we are clearing above the range here from the fourth quarter. So the Russell has done a good job at sort of telegraphing the move, being in front of the move, leading the charge, if you will. And if this is going to kind of foretell the S&P 500, then again, we get to 2800, maybe north of it, like we see in the Russell right now. And maybe the Russell doesn't stop here. It continues to slice higher. And if it does, that certainly bodes well for the rest of equity markets, generally speaking. And of course, again, not saying it's an easy chase, not saying we all jump in and buy now after 8 weeks of basically straight line higher prices. That's something that you're going to have to figure out based on your strategy. But the trend right now all points higher in the short to, I guess intermediate term, depending on how you define it. If we go to the Nasdaq 100 this here, coming back into the top end of that fourth quarter range, you can see it was still up 2% this week, but didn't quite get as much oomph into the end of the week here as, say, the Russell did, or even the S&P 500, which was up over 1% on Friday. The Qs lagged just a little bit, but generally speaking, this trend still continues to remain higher here, and we have some relevant prior pivots coming in all the way around these mid 170 levels. That's what I'd be paying attention to. And then this 166, this is the more, I guess still short term, but slightly more important level pivot that I would want to pay attention to. As long as we're above 166, then bulls continue to be in charge, at least in my mind, on this time frame. So let's jump into some of the other major assets here. We'll go to TLT first, which if we look on a weekly chart was down 0.3%. It was an inside week here for TLT, but I gotta say it is holding up quite remarkably well right now, especially in the face of a equity market that seems to be resiliently bid to the upside. TLT is back to the top end of its range here. It's kind of pushing up against this year-long 123 resistance, which is what we battled with all of 2018. We're right there. We're testing it. So be interesting to see next week if we can get some type of breakout here from this sideways range. It is nice and tight, has been kind of consolidating on lighter volume here. We'll see if it can actually make a move above 122, 122.50 next week. If we go to oil next, this again, nice bright spot this week, 5.69% to the upside and putting in a nice kind of engulfing week here. It did gap down to start off the week on Monday, and then it just proceeded to essentially rally all week. So it opened around and made a low of around 1080. It closed almost $1 higher. So from low to high, it had about a 9% range in oil. This certainly helps equity markets as well, of course, as we saw energy leading the pack this week. But it's starting to resolve this old range to the upside here, starting to trend and put in a deeper kind of retracement from the big downtrend that we saw suffered over October, November, and December. And it looks like, for me, oil USO ETF, anyhow, 1230 or so, that would be the next relevant kind of pivot that this stalled out from in November. So we'll see 1220 or so if bulls can continue this trend, if it can get back up there. If we stick on energy here, natural gas really on the weekly chart did stabilize a bit, but didn't do a whole lot. It was up 0.5%. Didn't really change the structure of this at all. It is still flirting with year-to-date lows here. There are some signs that it is trying to stabilize, but again, just like the comments from the last couple of videos, I'd really like to see this above 24.50, punch through there on volume with some authority. That would give me a little conviction, or at least maybe for a short-term squeeze for natural gas, that maybe this this latest leg lower has run its course. Until and if that happens, you got to respect the selling here, got to respect the downtrend, the fact that it's trading at or near year-to-date lows. So I'd be cautious here until proven otherwise. Finally, if we go to metals, GLD picked up some steam here late in the week. It had this nice orderly pullback that we talked about. We saw this accelerated trend that we drew in here from our last video update. Bulls held exactly where they needed to, starting to bounce us higher. Good volume coming in on the end of the week. So we'll see if this trend can continue higher. Again, it's another trend that is extended and tough to chase, but it did just have a 2 or so week pullback, and in a strong trend that is generally enough to continue it in its next leg to the upside. So GLD 123 or so, that's the relevant pivot I'd be looking at for upper level support. If we started to lose that, then we may have a more sort of complex pullback pattern on our hands. SLV, this one here also kind of regaining itself just a little bit into the end of the week. It did break this on Wednesday, I believe it was, started to break down from this trend, this slope that's been in place from the beginning of December, but you can see we're trying to get back above it, and this 1480 level, kind of a confluence of inflection here right around this 1480. So be in the bull's best interest, be in my best interest, because we do own silver, which we've talked about and disclosed in the past few videos, to see this get some nice follow through next week above this general zone here. I think if it does, that would be a pretty nice short-term development there if we can get follow through back above 1485 or or so, but we remain still long SLV, slightly looser stop on it, really patient and waiting for this to play out over a longer time frame. So that covers all of the markets. Let's take a look at some of the sectors now. We like to look at the top three, bottom three. So we'll start with the top three, and it is energy here. We can see energy did stall and move sideways, very similar to what USO looked like, but just kind of chopping around in the sideways range. It tried to break out at the end of January. It kind of fell back into this range, but it found support, and now it's rotating higher again. So XLE looks like it's marching back up towards kind of this prior December high here, right around $67 or so, kind of get into this old choppy area. As long as USO is kind of holding up and trending well and retracing its big fallout, then I would expect energy XLE sector to kind of follow similar course. IBB, this one here, pretty significant just because it has moved sideways here for 3 or 4 weeks, and it was one of the first to break back and reclaim support back here in early to mid-January, really early January, January 4th is when it reclaimed this breakdown level, and then it just went sideways. It stalled out for the past couple of weeks, and now it's starting to resolve higher. So for me, IBB looks really attractive here. Looks like a good kind of low-risk entry, breakout entry here based on Friday's close. We are still kind of range-bound on a larger basis. It does seem like 115 or so. That's going to be some more kind of stiff resistance all the way up into 120. It's where we chopped around from in 2018. So I do think, we do have some overhead supply around 115 into 120, but in the short term, after a 3-4 week consolidation here, even longer actually, it does look quite good. Semiconductors also continuing to really just clear above all of these prior overhead supply as well. We talked about this breakdown and just all of this overhead supply and how kind of nasty it looked back in here after retesting it and kind of contending with all of this overhead supply. And it looks like, after this kind of, call it a false breakdown or this latest kind of shakeout here right at the end of December below this range and then this rejection back above it, we've just continued to ascend higher here, very much in a V-shaped steep slope, but we are back above 100, kind of all of the prior supports in here, and we are just very much back into this wide envelope of sideways range that we were in for all of 2018. So again, really tough to chase, but it continues to march higher here, and we don't see any breaking down of that as of yet. If we go to the downside here, XLU, this is flat here this week. Really not much else to say about it. Just really tight trading over the past 5 or so trading days. MACD starting to level off just a little bit. We'll see if this just turns into a continuation pattern and eventual retest of the 57 highs, or if this is some type of rollover point at which XLU kind of starts to break down. It is nice and tight, so something to watch for next week. Materials, staples, not as tight as utilities. It was up 1% this week, so it is kind of charging back up. And speaking of overhead supply, coming back into a lot of supply in here from 2018. So again, really kind of difficult here, quite messy, not really interesting to me at all for XLP. And then finally, we have XLK, which is the technology sector, which was in the bottom quadrant here of performance. It was still up 2.4%, so it goes to show you that it was a strong week. And again, very much like the Qs, we are kind of coming back into the fourth quarter range in here. And just like the Qs, it started to taper off a little bit of, its excitement here, I guess, so to speak, lack of a better word, into the end of the week. This was real strong. This was at the top of the pile, maybe a little rotation out of tech, or at least a slowdown in tech and into things like, biotech and energy and maybe some industrials. That might be the next leg here, or the next kind of rotation to keep an eye out for. Otherwise, XLK, we're holding above this slope here. Looks good. If that starts to break, then, be careful and let's work on risk management if this trend starts to break down. So that is it. That is what I have for the week's video. Bulls just back at it again, 7 weeks higher, or what, seven out of the last 8 weeks, I think, for the S&P 500 in a straight line to the upside. Very, very impressive. Elevator down, elevator right back up. But let's pay attention to, let's not get lulled into complacency. As excited as maybe a lot of this, video was in terms of what the bulls are doing right now and how trends look across the board. Things can change quickly, so let's just make sure we keep an open mind and, keep an eye on risk management, as it is kind of our only saving grace out there. So that is it for me. Thanks so much. You can subscribe on our YouTube channel or follow us on the Trade Risk, traderisk.com/blog. Stay up to date with all of the latest videos. Have a great weekend. Oh, and I forgot, markets are closed on Monday. I meant to say that announcement on the top end of the video, but markets are closed on Monday, so enjoy the extra time off, and we will see you in the next video update. Thanks so much.